Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 11th. Mike Boutros with you on the horn. Aurelian, Jay, Marcin, Patrick, Peter, both great to see you guys in the house. Good morning to you as well, Patrick. Great to see you, sir. So, heading into Tuesday, and we do have some interesting setups. So the dollar advance, still thinking a little bit higher. We talked about this yesterday. The breakout 98, 96, just ahead of 99. We're looking for some resistance, possible exhaustion there. Euro on its way down. We'll look at sterling, dollar yen, dollar CAD, crude, Aussie, Kiwi, and gold. Obviously for Kiwi, guys, don't forget you have the RBNZ interest rate decision on tap later tonight. No changes expected at 1%. So do keep that in mind for the Kiwi crosses. On also housekeeping note, guys, this is the last webinar for me this week. We'll be out on Thursday and we'll pick things up on Tuesday. Monday is obviously President's Day. Banks will be closed, so there won't be a webinar on daily effects. We'll pick things up right back here on SB on Tuesday. So quick side note there. And let's jump right in. Any other questions or trade setups you guys want to review? We have dollar yen on the list. Yep. We'll feel free to throw them on the message board at any point. So here's DXY. Weekly chart doesn't really have much to talk about here right now. Again, just highlighting the breakout that we've been looking at on the upside for DXY, right into that 98.96 zone right now. 786 retracement of the decline off the high that we made back in September of last year. Also note that we noted 98.84, which was the high week reversal close for 2019. Checking both those regions right now. Note that the momentum trigger did break, right? So we have a confirmed break in momentum, price testing resistance. Okay, so on a weekly standpoint, we're right there. This is sort of the major target. Here's the stretch right now. It looks like we're going to get it while we speak. 98.96, 786 retracement. We've already made it through the high week close, but an area to look for, the stretch opening range high for August of last year. If you scroll to the left on the cursor there, you can see also the swing high that we made in that month, right there. If we get through this, and momentum is in overbought, so the thrust is there, your next upside target is the outside, the high day reversal close at 99.17. Okay, so that was the high that we executed back in September on that October stretch rather into the open. The reversal close was right here at 99.17. So your next sort of upside shot if this breaks. Near-term support, here's what the intraday chart looks like. This channel, as thin as it is, and you guys know, I've always told you I hate when, I don't like when the channels are so tight. They typically, don't give you that much efficacy for too long. But here we are, 2 weeks later, since the start of February trade, we've been in this super tight channel. 3-point touch on support. The parallel has a, I guess you could say 3-point touch on that third one, and we're right here. So a topside breach, okay, and that 99.14 level, that high day close, let me bring that in, comes in right around here. Oops. And 99.17. Whoop. Sorry about that. There we go. So that's your immediate focus, okay? So heading into the US trade session right now, look for a reaction here at 99, just ahead of 99, 98.98, 98.96, a zone of interest to look for as we open up US trade. A topside breach, 99.17, if we break the European lows, that would, invalidate this near-term up channel. Take this to a 60-minute just to go show you a little bit deeper time frame. If we break below those session lows, you're looking for a drop here. This happens to line up, this parallel, with the objective weekly open right here, 98.66. I didn't want to clutter up the chart, but that's what I'm looking at, okay, on both sides of the dollar. If we fail here, break below the overnight session lows, you're looking for that drop towards the weekly open, near-term bullish inval. A breach higher from here, look for that stretch towards 99.17, high day close. Might get an offer there next to channel resistance. Really precarious here, guys. Do not jump on the other side and try to fight these trades until you get some near-term price action, which is suggestive for exhaustion. We don't have that yet. Even if you look at this at a 30-minute, right? You're not quite there just yet. But this is the first major pivot here on the way up. Any questions on DXY? All right, number 2, here's Euro. And here's what Euro looked like. So the DXY levels, by the way, from the Sunday update, or I guess this was Thursday's update, no change. Okay, we're up here right now trading at that 764. We pushed into the 786, so we're right here at this target 98.98, looking for reaction. All right, so that remains the same. Euro looked like this into the Sunday open. We were still in this descending pitchfork formation. We noted a downside bias while below 109.80. That's near-term bullish inval, with really a kind of key support zone here as we head into the 109.20 level. So look, that broke. Here's Euro now. Okay, and we're moving lower. The next 108.82 target, that 618 extension from the decline, right there, right? Not too far off from where we are now. So again, DXY, as we started off the week, the sort of game plan stays right intact. Dollar pushes a little higher, Euro a little lower, starts to look for exhaustion in these key regions. But I still think the threat is still for a tag of that lower parallel in Euro, upper parallel in DXY. Euro on the daily, going a little backwards here, but here's what it looks like. Downside break of a descending channel formation should see acceleration. We're starting to see that now. Now, truth be told, this new formation seems to be holding pretty well, so we're still working with that lower parallel, could offer some support. What I wanted to highlight is look where that 1618 extension comes in. Look on the right, guys, on the daily chart. It lines up perfectly with that swing low that we made into the October open. So for the Euro, right, kind of really nice parallel levels here with some Fibonacci ratios lining up with some major swing lows, slope. See if we can't get that drift just a little lower in Euro. On the weekly chart, here's the broader picture. Obviously, the low we closed at 109.76, 109.80. We talked about that. It was sort of our line in the sand. We broke. Got to go with the trend. Got to go with the trend. So all indications are that you're still in the immediate risk for further losses, but that decline is heading towards some near-term support, some near-term resistance on the stretches. So what does that mean? It just means if you're looking for fresh exposure, guys, this is not the time to jump in line with the trend, right? Don't want to short at fresh multi-month lows. If you're holding shorts, and I see some of your comments here, guys, if you're holding shorts, look, you're heading towards extremes, right? So 108.80s into the, even into like where we are now, the 109 handle, might not be a bad idea to trim some exposure. If not, at least bring down stops, bring it into the money, if not better, break even if you're a little bit closer near term. But this is an area of which you want to be super nimble. If anything, you want to be winding down positions, not adding to new ones. Questions on Euro? So again, no change to any of those levels from the Sunday open. All right, number 3 is sterling, and here's what pound looks like. So we were opening the week. This one, I'm still debating how I want to kind of treat this one. So I'll take this back to the weekly real quick. You guys know we've been talking about this region for a while. 129, it's a big figure. And more importantly, it's a 38.2 retracement of the advance off last year's low. So it takes into account all of 2019 trade. It's the December swing low that you made towards the last week of the month there. Slope, same gradient for the pitchfork that we've been working with off of last year's lows. A big region, and we slammed right into it. And look what we're doing right now. 100% extension. So if this comes up being 2 equal legs down, risks a drop to 126.70. That's the pivot I'm working under the assumption with this move right here. What does that mean? It means if we break and we affirm a break below 129, you got soft target here at that 127.50 level, but really that's kind of the bigger level you want to pay attention to in that scenario. If this holds, that could be it. We're looking for a resumption of the broader uptrend. So for me, this is at a big pivot. This is at a big pivot. Tempted along on this, kind of got shook out a little bit, but here we are again, just holding this major 129 level. We're just straddling it. So here's the daily chart. Okay, here's what we look like into the open. No change to any of those levels. We actually closed last week right below that 29 level, but yesterday was just a straddle, right? So you have the median line for the descending pitchfork off the highs they made in late December and the highs you made late last month. You have the 38.2, and then even a 618 extension from the decline comes right there alongside the December open. So as I went over these levels with you guys a couple times, it's just littered with technical significance. And what is price doing? Well, last 3 days, we've been straddling that level. Sure, no problem. Good, that's good. I want to see that range break to get the definitive move. Ideal scenario, you see a recovery up towards 29.90 and we look for clarity there. Okay, that's sort of the focus that you want to be on the immediate front. Here's sterling on the intraday. Okay, so no change to any of those levels. We are just simply straddling this key region here. The median line's in there. Looks like we popped through, but the weekly opening range, or at least Monday's range, is still intact. So there's 129. Okay, if we crack 129 to the upside, specifically on the parallel, I think you get a larger recovery. We start to look for more building on the upside there. That said, sub 29, you're still at risk. You're still at risk. So even if this thing rallies up into this region, we're still predominantly in the downtrend, and that might be actually a choke point for the next move lower. Sterling's in a really precarious situation. I'm looking for basing. Wish I had more conviction on a position here. Pooh just saying I closed out my short at 128.95. Well done. Wondering if it's worth another short if we get to 129.68, 129.90 zone. That's my thought process, Pooja. If we get the recovery, first of all, if you attempt anything on the long side, that's sort of where you want to be looking to limit out on any long exposure if you play the rebound. But if we do get here, yeah, this would be a spot of which might be worth it for one last shot if we get the signal, Pooja. From a technical standpoint, it'd be a great spot of which to find failure on any recovery. If the broader downtrend or if the broader dominant slope is still lower, don't forget, I mean, for all intents and purposes, again, we did break upslope support. So if this is just going to be a break of support, we can even go back for an intraday spike higher and then make the last leg lower. Possible. 130. So that 130.70 level you see, yeah. So that this right here highlighted is my near-term bearish inval. If we get 30.70 on the upside, that would put me straight constructive for the resumptive trade, because that would essentially nullify the downtrend and it would be sort of a false break of a multi-month support slope. So that's for me like the breakout zone. Right now, though, the initial focus is just on how we react at 129 if we get there. Make sense? So that's sterling. See how high this bump gets. Okay, I guess just a note, 1, 2, 3 on dollar yen. I don't really have much going on here, but man, the levels are pretty darn clean. For dollar yen, sort of the only thing I want to highlight, here's what we look like into the start of the Sunday trade before we opened. The focus that we talked about was either break below 109.53, okay, that median line, or breach above that upper parallel to get the resumptive move towards 110. So you want to see sort of a range break for a near-term guidance, but here we are. Open the month, we fell into support. That support zone still holding. The upper parallel still hasn't even been tested. Here's what it looks like on the daily chart. I mean, for dollar yen, sort of the main thing that I'm looking at is is this. Here's the weekly, right? Like, man, this is pretty big deal. This is a pretty big deal. Maybe choppy ending diagonal to complete the correction of the rally off the September 19 low. You're talking about sterling with that, right? Possible, yeah. I wouldn't put it past. Ending diagonal would be actually a really good spot for that formation to take place right here in development of where sterling is in trend. I'd like that. But for dollar yen, I mean, I bring this chart up to keep highlighting, like, what do you do when price is testing or trading below a multi-year weekly support resistance slope? I showed you guys this multiple times on a closed basis, right? How clean this has been. It's make or break for dollar yen. I feel like I've been saying that for a couple of days now, but it really is. It's either failure here and it buckle back below 109.36 and we'll look lower again, or if this does break out, man, I mean, 111 is just going to be a near-term target to fill that uncovered gap from back last year. So with that in mind, with that picture up from 1,000 feet on dollar yen heading into multi-year slope resistance, this trade, right? This is the daily chart. Here's the pitchfork we've been following just from the October, January initial low. Here's the upper parallel. Here's the median line. This is your world for dollar yen right now, is this little range. If we breach higher, well, we talked about 111. That's going to be sort of a conservative target, in my opinion, if we breach higher. If we break back below the median line again, you look for that reset, tack on a quick retracement, look for that parallel. Might be a decent drawdown for dollar yen, but here's what it looks like on the intraday. No change to any of the levels. I'll bring you 240 charts to give you a little bit more clarity of how clean this formation is. Just textbook, right? Ideal scenario, again, this is my humble opinion, you see some sort of weekly opening range still take shape here, one last spike on some divergence, maybe into that parallel before the break, look for a bigger drop. 618 of the rally gives you 109 basically, which converges on that lower parallel basically over the next 24 hours here. So this is why, for me, if we do get exhaustion, if we get the move below 109.53, I think it's a decent move, but that weekly chart looks ominous. The daily chart has a really clean formation, and the intraday, well, we're right below slope resistance. Upslope resistance. So nimble if we take anything on the way down until we break 109.53. Questions on dollar yen? All right. Also, don't forget, guys, we didn't talk about it earlier, is tomorrow starts the 2-day Powell testimony, okay, before Congress for the Humphrey Hawkins semi-annual testimony. So just keep that in mind. Starts in the early evening. I think it's like 10 o'clock, if I'm not mistaken, or maybe even later. But just use that. Be cautious tomorrow. That commentary coming out may influence or have a little bit of a spark for volatility. What I would hate is a false break below 109.53. It's dollar yen, Pooja. Don't forget, it's earned the name abomination with great respect over many years. Yeah, that would be the sort of move I think that would screw as many people as possible, and that's why it's very plausible. Let me just say that. Just to put things in perspective, Pooja, 100% off the high, real near-term stuff would get you like 109.45. So if you want to open it up another 10 pips or so, 8 pips, just to give yourself some breathing room. Okay, enough with the abomination. feel like I gotta take a shower after that. Okay, number 5, dollar CAD. Here's dollar CAD coming into a big area. I put this out yesterday. I think the initial reaction was actually really good, so you might have gotten a play off it last night. If you're still holding that short, use caution just because we just set the monthly opening range or the weekly opening range. So we set a high, we tested the low right at slope. Look for a break of this immediate range for guidance. Guys, the level we've been talking about for a while is 133.30 into 133.35. We registered a high yesterday at 133.29 fractional 5. So literally right into it. Here's the pullback. Keeping in mind where the broader picture is, here's dollar CAD on the daily chart. 618 retracement from the decline off the highs they made back in May. High day close back in September. Swing highs in November, close highs in October, all line up in this spot. Okay. Watch the daily divergence or the daily momentum trigger, right? We're still in overbought technically. I mean, we're right there. So watch this today. An asserted break below 32.76 is sort of the way I'd love to play this. What's 32.76? Well, 32.76 is the reversal day close that we made on February 4th. Guys, out of the last, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9. Before today, out of the last 9 days, we've had one down day. One down day. And the reversal close lines up really nice with slope. That's around 32.76. That's sort of my line in the sand of which you'd start to look for a shift lower in price. That being said, key resistance, a breach from here, likely to see an accelerated move. Okay. In that scenario, you're looking for 33.83. You're looking for that swing high that we made back in September. You're looking for the 618 of the entire drop from the highs we made last year. That's taking it to 33.92. So just above that, the big figure, 134, is going to be upslope resistance, untested slope. This is just a parallel, the same dominant gradient, right? But more importantly, the upper parallel for that pitchfork we've been following, all of that converges at 34. So just another dollar cross and a major inflection pivot point. Look for reaction here. Here's dollar CAD on the intraday again. No change to the levels, look pretty darn clean. Okay, we're trading right below here, right above here, and this is sort of what you're bottlenecking into right now. A topside breach, 33.82. That's 618 that we added. It's just 33.92, just above, same zone. And then again, 34.35 if you get the extended break. But right now, ideal scenario is that we see a little bit of exhaustion off this push, a deeper pullback. You're still constructive on the broader trade above 32.36. Really important to note that. So if you get a broader washout and you're holding a short, guys, don't sit in it. Don't start thinking full on reversal. Don't start thinking I'm better positioned for a 130 clip here. We have to break upslope support for us to start even targeting that. But as it stands right now, that's the first major lateral hurdle dollar CAD would need to come up against. Questions on dollar CAD? Pretty quiet on CAD data this week. Look for the dollar to really drive this. And crude prices, what we're doing over there as well. Here's crude, number 6. Speaking of, this thing will make a move at some point, I promise. I just don't know when. It's been sitting here for the last 4 days doing nothing. So look, the levels are unchanged. No change to any of the crude levels. We're still sitting in that same zone, just below the low day close, just below that 618. So look, the major issue here, the major sort of focus is still on whether we see a little bit more of a correctional bounce, or whether we get that drop first into more key support at 47.34, 48.14. This is a major critical zone. Okay. And if you bring this into a 786, it basically converges right down there as well, by the way. But you get the picture. Here, I'll show you here, actually. Let's keep that in focus. There. All right. What else can we say about this? So no divergence yet. Yeah, I mean, on its face value for crude, what I want to see is a break of a really clean monthly opening range. And if the monthly opening range takes shape right below this zone, 51, 56, 52.29, that major pivot we talked about for months, I think you'll get a clear definitive break. It's just risky to try to push anything on the short side after this drop. And while below 52.29, man, trying to get long on this, I think yeah, you're trying to hold a balloon underwater. So want to be a little bit more cautious here. Levels remain on this unchanged. Not surprising, you're seeing dollar CAD doing what we do as well. So if we do get some break here, finally in one direction or the next, I expect we'll see a little bit more clarity in the dollar CAD trade. But as it stands, still focused on this key zone, key range since the open of the month. Here's your monthly open. Pretty well defined. So not much to write about there as far as the crude trade. Last night's update had Aussie, Kiwi, and gold. So here's what those setups look like. So someone asked about, I didn't get to go over this in the webinar yesterday. That webinar is so packed, guys. It's very hard to. I try to get your questions when I see you guys in there, but there's just over 100 people, so it gets very challenging to try to get all the questions. But here's what Aussie looks like right now. So look, I try to keep things as objective as possible. And I was working with this for a while last night. Look, we're just at last year's lows. Very simple. We never closed a weekly close below that low. We're sitting here right now. What do? You look at Kiwi dollar, still well off the yearly lows from last year, right? So you have that non-confirmation. You're coming here, finding a little bit of a support bounce. I can't get excited until we find a little bit more upslope on this. But, you know, beyond this 6670 barrier, you're just working with slope. I mean, it's lows you haven't seen in years. So the risk on a move lower is pretty major here. Here's what the daily chart looks like. This same pitchfork we've been following from the highs in what is that? 2017, 2018. Been holding. We turned right ahead of slope resistance last year, or into the close of December. Okay, right into slope resistance. Here's the pullback. Ever since then, we've been holding in this real near-term descending channel formation, right? We talked about really mounting divergence into that last low. Here's the rebound. Can't really get excited until you get through descending channel resistance, or at least that pivot range at 67.33, 67.45. So I'm kind of hopefully optimistic. Let's just say that. Do you have any clue where DSI is for Euro, SPX, and Aussie? Pooja, I don't have. I do have access to see DSI, to get DSI, but I don't have it on me like on call. But I can get that information. I have friends on the desk in the city. We all shoot around emails with that stuff, so I can look that up. But I don't have that off on call right now. So for Aussie, look, the threat is there. If it's gonna bounce, this is a good spot, but that's not a reason to take a trade, right? It has to be the setup. Here's what the intraday chart looks like. And here's what we looked like last night. Oop. Okay, so here's the 240. The only thing I love about this is that the channel is super clean, right? The parallel literally caught that to the pip. Here's the bounce. You have an embedded 3-point touch resistance level here. I just wanted to highlight, which also converges on this range, but it essentially continues to highlight 67.33, 67.45, 44 as sort of a pivot zone that you want to see price get through if we're going to see any type of recovery in the Aussie here. Caution is the name of the game here, guys. I put this report out yesterday with all these crosses as per your requests, because I got a lot of requests on Kiwi, and some guys were looking at Aussie as well. I can tell you, just from a disclaimer, personal standpoint, I haven't been involved in either of these, just because I'm a little skittish here. I'm on the lookout for exhaustion. I want to see a break of downslope resistance, but at the same time, you know, it's just not there yet. I think we need a little bit more patience on this one. If it were to wash out and you were to get an intraday wash into lower parallel and a close back above 66.70, I'm just talking fairy tales now here. That would be like a tell. That would be a gift long position. That being said, you know, you're still in a bearish formation. If it gets into 67.45 and this fails, we could see a big washout. So no positioning here just yet. Hopefully looking for some basing. Needs strength above 67.45 for the reversal. Otherwise, you're testing the October lows. Now, for Kiwi heading into the RBNZ, that one was coming into a near-term support yesterday as I was writing that piece, and it was 63.88. This is what it looked like last night. We were just dropping into that area. That's the 1618 extension of decline. Like I said, if this was a break of descending channel support, we'd want to see an accelerated drop here. We're not quite seeing that. In fact, the weekly range for Kiwi has been pretty pitiful. Interestingly enough, despite the fact that Aussie's seeing that little bit of a rebound, you're not seeing that really reflected here. We want to see what the RBNZ does later tonight. As I said, expected hold at 1% for the rate there. So really the devil's in the details. It's two plays here, okay? It's either a 64.24 break to the upside, and in any case, that would just be looking for a rally towards. I need to take all Apple products away from you when I'm doing these webinars. I'm sorry, guys. If it breaks 64.24, you look for that resumptive move just towards the upper channel. That would be the trade. You'd still be in the descending formation, but that would be the trade. If this holds, your next downside target isn't until 63.30. Okay, so you have almost like 100 pips to the downside if we were to break these lows. So pretty major sort of, let me just say this, the immediate focus is on the weekly opening range, which is super tight, just below 64.24, which is the 2018 low, and a huge pivot. I'm not just picking that random area out of the blue, right? October swing lows from 2018, pivot last year, breakout on the November range trade. Here's the drop. That's the invalidation level for the immediate downside bias. All right, so you get the RBNZ, like I said, tonight, about 1 a.m. Eastern, if I'm not mistaken. That's 1 a.m. GMT. Should be right after New York close. Let me tell you what time here in New York. I'm sorry, it's at 2 o'clock tomorrow. So keep that in mind. I'm sorry, RBNZ's at later tonight. 20 Eastern. And then we have the RBNZ commentary the following day, which we'll get some more commentary from Low there. All right, so that's Kiwi dollar. Look for a break of this immediate range, 63.33, 63.47, next major support zone, 64.24 near-term bearish inval. All right, last but not least from my list, 6, 7, so number 8 is gold, number 9. I'll be putting out, excuse me, I'll be putting out a piece on this on Daily Effects later today. Here's what gold looks like. All right. So look, that level of resistance, I mean, I'm not even gonna get into the daily charts here. This is something we've been following very, very closely. This is what we look like into the start. Here's what it looked like last night. The big level of resistance, 1575. If you guys recall, that was the bearish invalidation level for gold ever since last week. Here's our update on the 6th, right? 1575 represented the 618 of the near-term drop, but it also converged right on the upper parallel. So it was a really nice spot to look for failure. This thing pushed higher, pushed higher. Here's what it looked like last night. Right into that, you overshot it by a little bit, but the opening range high for the week is there as well. So a nice spot. Here's the pullback, and here's the retest of that slope. If this is going to move lower, we want to see this hold right now. 1575 is still bearish inval. We're straddling the weekly open. Next downside targets are 1562, just a soft target there. The 618 of the rally is 1558. Look for a bigger reaction there if reached. But man, real clean, right? Is Eman in the room today? I don't see her here today, but Pooja, I mean, you guys have been really champions of gold in the room here as far as the girls who are trading gold. But this formation has just been super, super clean. You don't or you want to pay close attention to these when they play out. Northbound at 1575, if it breaks 1582, 1586, still critical resistance. Nothing's changed on that front. That's still a major, major area of resistance for the gold trade. Nice clean formation, says Pooja, but doesn't give me a position yet. Yeah, I mean, the recovery trade, I think we both missed that one for the rally. The target 1575 was great. You got that tag 3 times. Yeah, I didn't jump into the short yesterday, although I felt really compelled to. I think we get another shot as long as 1575 holds, guys. Let that be the line in the sand for any short exposure here. All right, so that is gold. That's the last thing I had on my list, guys. Let me know if you have any other questions or trade setups you want to review. Here's SPX. Guys, this thing's ridiculous. Remember that slope we added last in the webinar yesterday, the pitchfork? Well, it broke. You keep those pitchforks on for real-term guidance, and when it breaks, just gives you the validation. So the intraday chart kind of needs to be redone. Don't worry about that. Here's what the daily looks like. Not out of the woods yet. It's funny when you see all these financial news publications. Yes, we did close at a record high yesterday. Yes, things do look great. In fact, yesterday we made an outside day reversal higher into fresh highs with price once again testing slope resistance. All right. Looks like another reference point if it holds at these levels of divergence as well. That said, if this breaks, we should see what, guys? Like an accelerated rally, a breach of upslope resistance, right? So if we do, you're looking for basic channel resistance. This is the parallel off the lows that we made back in December and January. Resistance on the upper parallel looks pretty good, 2 touch. Right now, immediately, that would be like just below 34, right? It's crazy. We're talking about these levels already. But I just want to highlight this chart. That's all I want to say. We're still below the slope. And well, I don't want to say I'm bearish, but you curb your appetite, for the long side. If anything, at least start choking up those stops. If this breaches, like I said, I would expect to see an accelerated pop. But if it doesn't, you are at resistance. You are at resistance. All right. Any other questions or trade setups you guys want to review? Feel free to throw them on the message board at any time. Otherwise, we'll go ahead and wrap it up here. Dollar Swiss, guys, I've been following this one for a while. I don't have anything clear as far as what the hell this thing is doing. So it looks like a breach of the objective January opening range. That's all I want to say here. But the one problem I have with it is on the daily chart. If you look at that slope that dates back to that consolidation that we were in, right? Or that upslope for all of 2018, 2019 break, look where we just petered out yesterday or today. So again, I don't want to start. There's a saying in the Middle Eastern culture: he who fears ghosts will see them. Right? Well, I just get concerned that if we look at this too long, we might kind of prompt ourselves to try to take a little bit more of a concerted bearish stance, but don't do that just yet, guys, because all indicators show that we still have a little bit more to go. We are overstretched on momentum, but we're still got a little bit further to go before we hit price extremes, which is what we need before we start fighting this uptrend in the dollar. So I'll leave it there. Michael, will there be any daily updates before next Tuesday? Thanks. Yeah, Patrick, the daily updates, I'm still going to hit that tonight, tomorrow, and even into the close of the week there on Wednesday and Thursday. But there's just not going to be a Thursday webinar. It's giving my birthday, so I'll be off. And then we have that weekend, the extended holiday break because of the President's Day off on Monday. But there won't be an update on Sunday night, guys. I don't want you trading on Monday. Liquidity will be thin. It's pointless on extended holiday weekend. So that next week, the first update will come out on Monday night to get you ready for the Tuesday open. Okay, but this week should be as regular. Thanks, Patrick. I appreciate that. All right, guys. So I'll wrap it up there. Best of luck trading this week. Keep it light as we get towards the end of the week. Like I said, it's going to be an extended holiday break here in New York, so you get the liquidity starting to thin out before that last holiday session. And keep in mind, again, the RBNZ later tonight for the Kiwi crosses. I want to see some directional biases. Look, the thing is stretched. We're way, where it's been a pretty massive drop here. So RBNZ should have to facilitate today either the accelerated drop now that we've broken downtrend support towards that key support zone down here, or if it buckles, like I said, above 64.24, it might be the recovery trade. Watch that tonight as the RBNZ gives their release. All right, guys, best of luck trading this week. Have a great extended holiday break, and I will see you guys on Tuesday right back here on SB. Cheers.